Hi friends, welcome back to our YouTube channel. Today we have got Vaibhav with us. Hi Vaibhav.
Yeah, hi. Hi,
Hi.
Rohit. Thanks for giving me this opportunity.
Yeah, so Vaibhav manages ICICI Prudential Technology Fund and technology में तो हमारा आपका सबका interest है ही, especially over the last 2-3 months जितना volatility we have seen in technology sector, especially in US markets. Jumping straight to our questions, Vaibhav, US में there has been just too much volatility. If you see Nasdaq itself has corrected so much from the top, और Nasdaq तो एक index है. अगर हम इंडेक्स के अंदर जाके वेरियस कंपोनेंट्स को देखते हैं, इफ यू लीव couple of very large stocks like Google, Apple, who also have corrected but have not corrected that much, but some of the other stocks have just got decimated. There are stocks who have fallen by 70-80%. Some of the very very large stocks like Netflix, उसने तो 5 साल के gains पूरे चले गए हैं. Stock prices today now what it was 5 years back. So if you can help our viewers understand exactly itna mayhem क्यों हो रहा है.
So basically, if you see Nasdaq, it would have corrected maybe around 23 to 25% from its peak. In last 6 months, from I think November was somewhere, Nasdaq got its new peak, and from there onward, it started correcting. I think the first 3 months correction was largely in the anticipation of possible reversal of Fed actions, easing cycle, right? So the possible reversal of that. So that was happened. That was happening in the initial part. So that is where tech stocks started pricing that. What happened? I think post Russia-Ukraine war situation, commodity prices, specifically oil prices, started moving up, and it became very clear to the market that Fed has to perhaps be more aggressive in taking interest rate uh, higher, and then it would perhaps now it has reached to a point where US stock market is pricing in kind of a possibility, a decent possibility of a recession, right? So that is why you have seen the second leg of correction which has happened further in Nasdaq, where many of these stocks have decimated, as you mentioned, to 70-80% of their highs, and there are many stocks which have reached to a pre-COVID level as well. So I think the second leg of correction has happened because of the fear of growth slowing down, possibility of recession in US and Europe. And on the top of that, you will have possibility of higher interest rate for a longer period of time, right? Because of all of these reasons, I think you have seen the massive correction in Nasdaq.
But Vaibhav, just help our viewers understand all the factors that you have mentioned. They are equally applicable to the old economy stocks, also industrials, consumers, etc., etc. Why has the impact been so much more pronounced or so much higher in Nasdaq or tech stocks?
No, I think the reason is very simple. Like the traditional stocks, which are more, if they are old economy or in any other sector rather, it all boils down to a situation where if they are generating a very healthy profits, very healthy free cash flow, then there is only a limited possibility where the stocks would get derated, even if there is a kind of a recession, right? In tech sector in US, of course, there are many stocks where the profitability is of a longer duration, right? So there are some companies which are expected to become profitable only after 7-8 years or only after 10-12 years. In these stocks, the level of uncertainty increases significantly whenever there is a growth slowdown. Because in COVID, there has been perhaps some amount of pent up buying of softwares as well from the corporates. Some of that can be discretionary in nature also. So if there is a pressure for if there is a pressure in the industry as far as margins are concerned, the traditional industries who are possibly the clients for these tech companies, if they face pressure, then they can perhaps slow down some of these discretionary spending. They can perhaps little bit defer some of these discretionary spending. So in the anticipation of all of these things, plus a very low profitability or negative free cash flow, plus an environment where liquidity is tightening. So all of these actually adversely impacted some of these stocks which are not free cash flow positive.
So how do you see Indian IT companies, especially the large ones, performing in this kind of an environment?
So I think there are two parts to this situation. One is the stock price performance and one is the actual business performance. So I'll cover the second part first. As far as businesses are concerned, Indian IT services business, uh, they are in a very solid footing. Indian IT services has achieved cost leadership as far as IT services is concerned on a global scale. And today, I think they would be having 20 to 25% global market share, addressable market share. There are different ways to look at it, but broadly, it could be between 20 to 25%. In few of the areas like application development, Indian IT services would have very high market share to the north of 40, 50, 60%, depending on which segment you look into. So I think the world is dependent on Indian IT services uh, globally. US companies, Europe companies, they are quite dependent on Indian IT services companies. COVID has shown us that how much Indian IT services has been very helpful to the entire world, right? So as far as the business models are concerned, the business models are fairly robust, fairly strong. Let's say we had 2008, we had COVID. So I'm not sure what is coming next. But whenever there is some kind of a macro event, as far as business is concerned, you will not see, you will not see a big uh, 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 decline in the revenue. So there would be 1 or 2 quarters. My this is my prediction, and I might be wrong here, but there can be a possibility of 1 or 2 quarters where you will see a sequential revenue decline, but then from there onward you will see a V-shaped recovery. And this happens essentially because a large part of work which Indian IT services companies are doing, it is still a very sticky maintenance kind of work. Even if recession comes, you will not stop your investments in the IT services because your organization backbone is IT, right? So that is my view on the business for IT services. As far as stock prices are concerned, stock prices would remain volatile because if there is an actual slowdown which happens in the US economy, in the Europe economy, and of course, sitting today, we do not have any great predictability, right? So I would not go into predicting, whether it will happen or not. But if in that event, of course, there is a scope, there is a room that the volatility in these stocks can increase, prices can come off further from what they are right now. Uh, you know, but again, if you have a 2 year, 3 year view, you will still make good return. One of the other things which favor Indian IT services is like if you look at our trade deficit, our trade deficit is running quite high. So therefore, I think there is a more pressure for the currency to depreciate rather than appreciate. From here on, looking at the oil prices, trade deficit, and various other macro factors. So because of all of these reasons, currency can also be supportive. The fourth thing is that if you see, if slowdown happens, if growth slowdown happens. So right now, in last 18 months, last 6 quarters, what you have seen is the immense pressure as far as margins are concerned for IT services. That has happened because of a very high, growth in the sector. Because of that, there was a shortage of talent, and because of that, attrition increased and wage hikes, were higher than normal, right? So if slowdown happens, they will have a benefit also in terms of margin expansion. So currency can also help them potentially, and reduction in the attrition rate and reduction in the wage hikes can also help them. So both of these two factors would work in their favor. Whenever that scenario plays out, of course there would be a temporary cut in the growth rates, basically. So yeah.
So what do you think investors should do at this point in time, both existing investors and new investors?
So I think first of all, if you look at the technology sector, last 20 years, CAGR would have been just for Nifty IT. Last 20 years, CAGR would be in north of 15 to 16%, and most of the companies in this sector are good dividend-paying companies. They have a good free cash flow, and along with that, they have a high free cash flow yield as well. So I think what my advice would be is that these stocks could remain volatile for some period of time, and therefore best is that to do more of a SIP-based allocations in this in the sector, and if somebody has investment horizon of 2 to 3 years, you can still expect decent return out of this sector. But my suggestion would be to do a more of a regular investment, and do not do all the investments in one shot.
So again, viewers, thanks a lot for joining us. Thanks, Vaibhav. Or through lump sum, you know where to go. You can visit kotakcherry.com, or you can download our apps from Apple Store or Google Play Store. Thanks again, Vaibhav, for joining us, and we'll meet you soon. Thanks a lot.
Thanks a lot, Rohit.